Well, today was certainly an interesting day. Over the weekend, I wrote about how the market has been acting, well, seemingly bulletproof as of late, and the markets have continued to kind of grind their way higher, and that we will be looking to add some equity exposure to portfolios on really kind of any slight market weakness this week. That all changed over the weekend as concerns over this rising trade war have continued to gain traction, and more importantly now we're talking about potential restrictions on investment into tech companies as well, which really impacted companies like Amazon, Google, Facebook were all down sharply today. Netflix was down sharply. Of course, also all of your semiconductor companies, KLAC, Micron, AMD, etc., Texans, all down because they do a lot of manufacturing overseas, and these trade wars are now starting to impact manufacturers directly where it hurts the most, and that's through investment. So the market opened down fairly sharply this morning, gained traction to the downside today, really kind of reversed all of our plans, and also lost a bet today. So my good friend Doug Cass, who runs Seabreeze Partners, we feature a lot of his work on our website. He's a great guy. But over the weekend, he tweeted out that he disagreed with my view on Saturday, and that he was going to post a piece this morning. And so he did. And that's actually on the website now. You can see what Doug Cass wrote this morning. It's on the website. But we bet a case of beer that the market would or would not break the 100-day moving average by the end of this week. And my bet was that the market would hold on to the 100-day moving average, but I made a mistake when I made my bet. I didn't say it would break the 100-day moving average and stay there through the end of the week. I didn't say that. I just said break the 100-day moving average. Well, we broke the 100-day moving average today and then recovered right off of it, so I still lost the bet. Now, I'm honoring my bet, but right now, according to the way I analyze things, is that we work on a weekly basis. So right now, we are still above the 100-day moving average until the end of this week, and that's going to be key as to where we finish up this week. But
what kind of beer are you going to give him?
He is a Montauk or a Sam Adams fan.
Okay.
So in tomorrow's post,
none of this watered down stuff.
None of this watered down stuff. So in tomorrow's post, technically speaking Tuesday, which will be on the website in the morning, I talk about the bet and I have both views posted and what we expect. And there's also a clip of Smokey and the Bandit because I got to figure out how to ship a case of beer from Texas to Florida. So I may be having to hire Jerry Reed to do some running for me over the next couple of weeks. Exactly. Well, Jerry Reed was the trucker. Remember, Burt Reynolds was the blocker.
Yeah.
And so
there's just one case.
I know, but if we're going to do this, I want to do it right. I want to drive the Trans Am. So, so if anybody's got an 18-wheeler willing to haul one case of beer to Florida, let me know. I just got to go get a Trans Am. We'll be good to go for the weekend. Anyway, the point here is that I did lose the bet. But here's the thing. Talking about this, there is, despite the fact this rhetoric today that came out really did weigh on the markets this morning. Now, Peter Navarro, well, the markets were down 500 points at one point today on the Dow. That got the administration a little bit concerned about their back-of-the-napkin policy that they've been trying to push along here. And I've warned about this before, is that just throwing out tweets and just throwing out policy without thinking it through, at some point you're going to trip up the markets and say something they really don't like. Well, you did that. And the White House was very quick today to get somebody out back in front. And they sent Peter Navarro out very late this afternoon to try to help stave off the market. And this is what he said.
I think today's market action is a very large overreaction. What we have here with Trump trade policy is a tremendous success for this country and for this market. It's very bullish. We've got manufacturers at the highest level of optimism. Let me just finish. I think it's important to put this in context.
1 second.
Sure.
So first of all, manufacturers' optimism is declining rather sharply here. Harley-Davidson just announced over the weekend they're moving their manufacturing out of the country because of these tariff issues, because it's raising the cost of labor. And we're going to see a whole lot more in that. While Peter Navarro is trying to spin a good story, they're trying to spin a story that has a false narrative to it. And we've talked about this on the show before. But nonetheless, the comments today actually did stave off a little bit of this decline, and we did get back above the 100-day moving average. But here's the problem. Well, let me start with the good news first, and I'll tell you the problem. The good news is the markets are still in a positive uptrend right now, and we're holding on to that at the moment. So that is good news. The second thing is that we are continuing to hold support along the 100-day moving average. That is also good news. So there's a good confluence of support right here at the 100-day moving average. There's the 50-day moving average, the 100-day, the 75-day. There's a lot of moving averages that all converge in this one very tight spot right where we are right now. So there's reasonable expectations the market should be able to hold on to this through the end of the week. The not so good news is that the base of support that we were hoping to, that we were building, and I talked about this in the newsletter this weekend, we had retested this support, which is right at the 61.8% Fibonacci retracement. Now look, that's a bunch of technical mumbo jumbo. Don't worry about it. All it means is there was a good little bit of support price-wise for the markets to hang on to last week. We failed, and now we're back into this previous trading range that we were in from early May, where we had originally increased exposure. So really, since early May now, we've gone nowhere. The bit of advance that we had tried to make over the last couple of weeks has now evaporated. We no longer have that. That's gone. And basically now we're back to where we were back in May, which is also back where we were back in early February as well. So really for this year so far, we've not made a whole lot of progress really on any front. And that's concerning because we're now in the midst of summer, in the seasonally weak period of the year. The market really can't seem to get their foot underneath themselves. And if this is coming at a time where we're hiking rates, we're tightening monetary policy, the European central banks, Bank of Japan are reducing liquidity as well. And we continue to push on this trade war front, this tariff front, which now China, and we're going to talk about this story after the break, China has now vowed to retaliate. They were kind of okay with this up to the point, but Trump keeps getting more and more aggressive. Now you're starting to have China push back. This is potentially going to weigh on the markets more. It is not going to work to bring back jobs and manufacturing. There's no evidence right now that that is occurring. All the only evidence that we have that these policies are working in any manner whatsoever is the fact that we have companies buying back stock at the fastest clip in history, trying to manage their earnings expectations. So there's real risk here to the outlook of the market short term and longer term as well now. So again, tomorrow's post, we cover all this in a bit more detail and really talk about both sides of the argument. But again, while there is positive action here, and I don't want to dismiss that at all, the fact that we do have positive action, there's nothing here to get overly concerned about. There is risk mounting, and if you don't have a good investment strategy, a good sell discipline, I advise you to get one and get it fairly soon. If not, get by our website, send us an email. We can help you with it as well. That's what we do. We manage money, we manage expectations, we manage risk. So if you need help, get by the website, realinvestmentadvice.com.